Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin. Dennis is, as you would imagine, trading heavily this morning. A lot of overnight news, probably the biggest overnight news we've had in terms of geopolitical stuff in a while. So if you saw what happened overnight in the markets, then you understand why Dennis is trading this morning. He may join us later in the show. He may not, but we've got a lot to discuss, starting with the Iranian missile strike on Iraqi bases and the market's reaction to that. And we'll talk about that reaction and how it's basically given all of those moves back this morning. A lot of other news to discuss aside from that. Beyond Meat is moving. GM warned about their sales in China. Tesla keeps moving. Macy's gave some holiday sales. We have some earnings. We have some ratings. And it's a good day to talk autos because we have our guest, Michelle Krebs. She is executive analyst at Cox Automotive. She will join us at 8:35 to talk the auto stocks and sort of the winners and losers of CES and what her projections are for GM, Ford, and Tesla for the year. Joel, let me just ask you, what can you say about this overnight session here? I don't even know what there is to say.
Boy, oh boy. Well, I'll just give you the numbers and then we can get some commentary to it as well. I guess if you're going to say buy the dip, there was one hell of an opportunity. Things unfolded quite quickly after the 4:15 close. You had the news leak out, just kind of caught momentum, went lower, and lower. I think a crescendo of selling. Took the S&Ps, maybe just not knowing what was going on or what the damage was. Took the S&Ps 60 points lower than we are right now. We went to 3181. That is going to be a big number for a long time since we bounced 60 handles from it. Right back up here at all-time highs. 46 and a quarter is your overnight high. That's real close to the Monday intraday high. I mean, folks, after all this news, we're still less than 20 points away from all-time highs. So market has definitely shrugged this off. Crude sprinted to 65. Your frackers, everyone pulling oil out of the ground over $60 was out there selling futures. After being up nearly $3, now we're in the red by 69 cents, 62.01. Gold went over 1,600 for the first time in I don't know how many years, hit 1330. Now it's in the red by 40 cents. Silver nearly went to $19, went up to 1889.5. Now trading down 7.3 cents at 1832. Bitcoin quietly here moved into the 8,000 handle. The Bitcoin futures are up $90 at 8,370. So Bitcoin being included in a little bit of the flight to quality here. It's still holding up today, but you had the sell-off. I think what's causing problems for a lot of the overnight trading, a lot of the ARBs, is you made that low between 7:45 and 8. So at that point, there had not been a Trump tweet. There had been nothing to verify. In fact, one buddy of mine here asked if Iran fired Nerf guns. The damage was minimal. I guess we haven't really heard anything official. All we can deal is what we have on the screen, and there's green on the screen here. 32.42 up at 6 3/4 handles.
It seemed like it was a warning shot. They fired it at 2 Iraqi missiles, 22 missiles at 2 Iraqi bases. I haven't seen any reports of any casualties from either the Iraqi side or the U.S. side. But the timing was very unusual too, because this happened around the news started to get out at around 5:30.
Earlier.
6.
I was looking at Pro, and I saw something as early as like 421.
Okay. And
Yeah.
then we really started to leak for the entire after hours session. Like you said, we didn't details were coming out, but we didn't get any official anything until later in the evening. And Trump comes out at what 9:45 Eastern time, I believe, and says, yeah, 9:45 last night, tweeting all is well. So far, so good as far as assessing the damage is concerned. But by that point, the market had sold off and started to bounce back already. So it's sort of crazy how all the moves, all the big moves from between 4 and 7:45, 8 p.m. last night,
Yep.
it's just gone. Like they just undid all of it. And on top of this, in the midst of all this happening, a Ukrainian plane leaving Iran crashed. It was a Boeing 737, and everyone on board was killed. So on top of this happening, you have another Boeing. On any other day, we would have led with that probably, but I don't know. There's a lot going on here. You have overnight big moves, 1.5% moves in S&P futures, and big moves in oil, moves in Bitcoin. It's all moving here, and it's giving it back. I don't even know what you can say about this market.
It by the I guess by the dip, no matter what. I
I
mean,
don't know.
that's what the
Yes.
opportunity. It's just a question of, when do you come in and when do you buy the dip? Using. I mean, at 8 o'clock last night, it probably looked like we were going to be down, 2-3,000 points, and then
Yeah.
the stocks closed and all the arbs are locked into their positions. You started the rally. The Trump tweet, sent things, got things going in the other direction. We'll just, he has a press conference later on today. One has to wonder, if this was a warning shot. I mean, if this was their bet, if it was best effort. I mean,
Seems unlikely. I mean,
yeah,
it seems like it was a they tried to do a proportionate response here. But something else that confused me this morning is I came in and I hopped on my laptop and I've got Thinkorswim on there from TD Ameritrade, and I'm seeing all these candles, all these ticks at 8, 9, 10 p.m., 11 p.m., 12 a.m. in the SPY, and I'm just like, what? Because and it took me
right.
a second to realize that you can trade overnight in true 24-hour fashion on Thinkorswim, TD Ameritrade, and this is a day that was made for that, and I had forgotten that was the thing. So if you're on your Thinkorswim this morning and you see these overnight candles at odd hours, it's because they have an overnight market. You don't typically see that because there's really not much of a market at 11 p.m. But last night there was trading at 10, 11 p.m. in on TD Ameritrade. But for everyone else, they woke up this morning and the dip was bought. The
Yep.
SPY gap from basically 317 right up to 322. I think is where it opened. Well, where did it open at, Joel? 322.
At what time are you talking about?
I'm talking about I guess what am I talking about? The 4 a.m.
Okay, yeah, I can give you that. Boom.
I think it was around there at 4 a.m. Yeah, 322
Yeah,
at
let me
4 a.m.
see here.
So, I mean, it just what I just don't even know. I mean, so I take umbrage with the statement from Trump that all is well. All is obviously not well right
There
now.
you go.
So let's see how this plays out. I don't even know. I guess I didn't even expect Iran to do what they did, but now we've got missile strikes on both sides here. I don't really know how. Obviously, I don't think anyone
Yeah, there's
knows
nothing. I mean, all you
how
can
this
look is
plays
what the
out.
market just did. It reacted. It's off the lows. We have resistance above. Let's see if we can break through that resistance and make a new all-time high. Let's go to the Boeing price action.
Yeah,
Different theories on why that plane went down. We don't know the exact reason. I heard it was an engine fire. Uh,
that's
but I mean, the same thing. That the crash happened. It opened up at the 4 o'clock session, opened up at the low, and rallied and got opened up at 327 and rallied, got a lot of the losses back. I'll look at the range from yesterday. I don't think we're going to see yesterday's closing price of 337.28. We're trading at 330.71. That is even above yesterday's low here. So use that as support. And your low from yesterday, which, man, look at that. Your low in the regular session from Monday was 27.88. And then in pre-market trading, they took it to 27.60. So there's if you go back down to that level, there's your support in Boeing. Had a nice pop yesterday over 340, but couldn't hold it. Keeping an eye on that 330 area, but more importantly, that overnight low coinciding with the low from Monday. And actually, there's another low in there from January 2nd at 327.70. So I think I would move my, obviously 320 is a huge level there, but now you got to really look at 327.70 as you have 3 different data points coinciding at that level. So Boeing and plus the SPOOs rallying probably helped it out a little bit, but we'll see what happens. We have to wait to get to more information on the causes of that plane crash.
It is just crazy how this market moved. If you look at the overnight charts of the stocks we've been talking about the past few days, Lockheed Martin, Northrop Grumman, Raytheon, and even your like defensive like staples like Procter Gamble and Coke, they all just moved and then moved back. If you look at like Lockheed Martin,
Yeah.
I mean, they made a move, moved back. Coke made a move and moved back. Procter Gamble, move back. Raytheon, all these, the war trade basically happened, and then it undid itself in a matter of hours. It's just crazy how fast that trade was over.
Yeah, and not only in the price action today have you seen that in these defense contractors, but they're just thinner stocks. Your $300-400 stocks. Someone sees plane, the strikes. They're lifting offers at just exorbitant prices. Not a lot of volume like Lockheed Martin. Somehow it traded up to 438.99, but a couple thousand shares have traded there, not much, and then just all the other lots. So they're thin stocks to begin with during the regular session. The even thinner overnight. So if you're trying to play these, these moves, some of these overnight moves, a lot of times, we've said this on the show, it's more, like if you were long Lockheed Martin and you had a 435 target, take it. Who knows what's going to happen? Goes to 438, you're looking bad. But, you wake up this morning when cooler heads prevail and there's a little bit more liquidity, boom, you're back down. So, thin stocks during the day, even thinner at night. So, that's something that you got to keep an eye on. Stick to your targets and your rules and your discipline. And, I'd hate to see any of our customers, get, caught buying up there. And Spencer, I wanted, we got that nice phone call yesterday. If you could place in the chat or say again, I'd like to, for our people that are perhaps on a train or in a car and, listening to us on their phone or whatever, hopefully you're not driving and watching the show, but put out a number. We had a great question yesterday, and we'd like to do all we can to help investors, not only ones that are sitting at their computers at home, but for other people that are joining our show around the world.
Let me bring on Dennis here. Dennis, first of all, good morning. Did you sleep at all?
No, there's been no sleep. And if you want to talk bad here today, this is what you'll look like when you basically don't sleep. So it's been just an absolutely insanity. I mean, from last night when we were down 55 points to rallying it all back. And I had the phone call with Joel about 9:30, after the equities had closed at 8, I finally was able to, talk on the phone, and we were rallying on the futures already. We were already 30 points off the lows, and I was just looking and saying, that there's a possibility they're going to take this market flat. I'm like, I can't believe it. I literally could not believe that, we can drop 55 points. Last night looked everything like it was going to crash today. You think about how many people are long. You just think about the setup. You think, gold spiking, the oil spiking so far, the defense stocks. It looked like we were going into World War III. And here we are 12 hours later, and it's like none of that happened. It's the buy the dip mentality is just absolutely unbelievable. And yes, we got some more news. And yes, we've heard there's no casualties. So that was maybe a big catalyst, that it wasn't as bad as first feared. But to buy this market higher on this, I can't fathom it. I mean, is this over? Is it over now? Like, that's it? I highly doubt this is over. So I don't know. Like, maybe this is an opportunity, and yesterday I was like, I don't see what's going to derail this market. That market was so spooked last night that it's got me spooked. And I'm like, I don't know if this rally this morning is a gift, or maybe it's just going to continue to rally. And there's going to be the people who say, well, war times markets rally in that as well. I'll tell you, last night, it looked ugly. Like, we had stocks. I bought McDonald's last night, and we talked about this. I bought McDonald's last night down almost 5 points. They're selling McDonald's down $5 last night. Like, you can look at the trades on it. I think I bought it in the 198 handle. And then maybe some in the 199 handle. So down 4 points on McDonald's. But that wasn't the only thing. I mean, AMD last night was trading down almost 2 points. It was in the low 46s. It's got all the losses back too. I mean, this is the most resilient market that I've ever witnessed in my 20 years. I don't know what's happened before that, but I've never seen resiliency like this before. What are your guys' thoughts? I mean, is this over? The market's acting like no big deal. No big deal that they, targeted U.S. military sites. No big deal. It's okay. That's what the market is saying right now. Is it rational? Is this rational?
No, probably not. But one day, I don't know when that day is, this pattern will end, and they're not going to.
I thought it ended last night, and I positioned. I was buying gold stocks last night. I was buying oil stocks on the initial thing, and those, and obviously, I'm not getting the beats on them because they've turned, they turned around. But oil was up last night, $4 a barrel, and now it's down. So not only gives it all back, it actually goes down. So the market is saying that it is over, that there's going to be no war. There's going to be no continuing of any of this. This is done, one and done. That is what the market is saying right now, especially with oil trading down. I don't know if I think that's one and done. But if you believe it's one and done, and you see the resiliency of this market, I mean, it's a very hard market to go short in. Like, how do you continue to go short this market that buys everything? They don't even just buy, they're buying, when the US is targeted. They're buying this. It's nuts. I don't understand it from a rational thought that none of this makes sense. This rally makes zero sense from thinking rationally. But people aren't thinking rationally right now. There's just money managers who are underinvested. They lick their chops again overnight here. Futures down 50. They're like, get me in. Fear of missing out is just FOMO. It's all FOMO. But I don't know if it's done. So I'm like looking out. I'm pretty fully invested in my portfolio. I'm almost thinking maybe I should lighten up a little bit, but it's always been a mistake. It's always been a mistake to lighten up. I'm just scared that this is not done yet, though. Are they going to be satisfied that nobody got killed with their vengeance that they're taking? Are they going to be satisfied that nobody got killed? I'm asking. I don't know.
I don't know either. I think what's really interesting though is that, the timing of things too. I mean, between, the stocks or the stocks are still open, but the futures are closed, between 4:15 and 4:30. And then the low was made at 7:40, like between 7:45 and 8, right? So then boom, and then the tweet comes out at like 9:45. So very, very hard to position.
What tweet are you talking about?
The Trump tweet.
The one at 9:45, all is well. That tweet.
Yeah. And is that the reason? Like, it's all because of a Trump tweet that everybody shrugs this off?
No, because the market was coming back before that.
It was off the low.
It made sense to come back somewhat, because once we found out there was no casualties, once we found out it wasn't that bad, that made some sense. So I'm not arguing,
Mhm.
being down 55 points last night with no liquidity, I heard what you're talking about before, was probably irrational. That's why I was buying some stocks. I mean, I wasn't just, getting all bare. I was buying some stocks down there too. I bought Qualcomm last night. I bought a lot of stocks last night too. So, overall, I was fairly hedged with my trading portfolio. But when I look at it now, we're trading up 10 handles. What, like, maybe it's just all the people who shorted last night are just scrambling.
I think that's a lot of it too.
So maybe that's what it is too. But I cannot understand why this is a positive event. That's what I don't understand. So it was a blessing. If there really is no casualties, that is a very, that's a blessing. And thank goodness for that. But to come over here, and obviously there could have been some casualties and US sites targeted, to come over here and now buy it and take us green by 10 handles, that's what makes no sense to me at all. I think, maybe rationally, we should be down to 20 to 30 when we and you were talking last night, Joel. But this is all now just, people bouncing in and saying nothing's going to bring this market down. I need to get long at any cost. I need to be invested in this market. And, and I don't know what everybody else is saying. I haven't logged into the chat yet because I've been so busy, but I'll log in there and take a look too. I'm just, this market does not trade rationally at all. It hasn't for years, but now it's like, it's not scared of nothing. It's not even scared of war. It's not even scared when US sites are targeted.
There you go. I mean, just look at the top, like I'm saying, I'm going back to the timeline events. Now we have the liquidity coming in, at the 9:30 open. We'll see what happens with, by the end of the day. Also, Trump speaks and stuff. It'd be absolutely remarkable. Perhaps we hold on to these gains for today. I just like what you said. I mean, also they were saying, on the TV that this is just the beginning of the attacks, and this is just, we're just getting started. And I think that added a little bit of a fear.
And maybe it's a one and done. That's what the market is hoping for here. Or maybe the market just likes war, and maybe you can have all the the people come on and say, well, it's good market. We saw what happened. Basically World War II ended the Great Depression. There's all those arguments too. But I just am so impressed by the resiliency of this market. It's why I'm fully invested. But I got spooked last night, and I had major remorse for being fully invested last night. I was thinking about my long-term portfolio, and I'm like, I'm going to lose a lot of money in the long-term portfolio. Yes, I'm making some money trading, but I'm going to get killed in my long-term stuff. And now it comes back. I'm going to actually make money on this in my long-term stuff. It makes no sense to me. So part of me just thinks I should lighten up a little bit, not be fully invested. Maybe, lighten up and raise another 10% cash. Maybe. Part of me, my spidey senses are saying lighten up. But again, every time I've done that, it has been a mistake. And then I'm scrambling to get stocks back. So I guess you just stay fully invested and don't worry about your long-term stuff. But from a trading perspective, I'll tell you, I'm not buying today. And maybe I'm wrong. It's going to keep squeezing them. Maybe we're going to be up like 500 Dow points just because this market is that way. I'm too scared to short it too. And obviously I trade and I do all the inefficiency trade. And I'll be making lots of trades today. But to make a call and say I'm going to go short $1 million worth of SPY here because it's just irrational, I can't do that either. It's hard market.
I have a question. I'm already exhausted. When does 2020 end? I need a.
It's been a pretty crazy 2020 so far. We're 7 days in. I mean, it's been pretty crazy. But let's think about this VIX. The VIX down here too. I mean, let's just say that it's not done. And let's just say, the VIX being this low, portfolio insurance is probably still pretty cheap. Maybe that's the play. Maybe you just buy a little bit of insurance just in case it's not a one and done. I don't think it's done. Personally, I don't think it's done. I don't think they're done. I don't think they'll be satisfied that nobody died because they want vengeance. Well, nobody died. So I don't think they're going to be satisfied with that.
Well, here, I just could come to a conclusion, then we can move on to some of the other stocks. I think what the market is saying is like, this is the best that they had, and this is what they tried to do, and this is a retaliation, and it didn't amount to much. So I think that's what the market is interpreting right now. Hey,
why does it interpret it? I guess because nobody died. You know, why does it interpret it completely different last night when they sold everything and bought gold up $40 and bought oil up $4? Why is it all interpreted differently now?
My best justification is it was not a U.S. site. It was an Iraqi base that housed U.S. soldiers. But
did somebody die? Somebody's saying there is some casualties. Like I heard nobody died.
I heard no U.S. deaths, and last I heard it was no Iraqi deaths. But
okay. So anyway, somebody in the chat, somebody was saying H3R was saying someone did die. I did not hear that anybody died.
Me neither.
So that's news to me if somebody did die in this, and I hope nobody died. I really, I was thinking the worst when I was seeing the market tank last night. I was like, oh my goodness, it's going to be a lot of people that got killed in this. So it sounds like they were prepared. If nobody died, it's pretty impressive. So that's good preparation, and excellent news that nobody died. But I still can't understand. I just don't get why.
I don't think we're gonna. I
guess we just can't think about the market, and move back to it. Maybe we just talk technically, because when you try to put rational thought to this market, you'll lose money. I mean, this has been the way this market has traded for years. If you're always thinking rationally, all through, the last 10 years of this bull market, there's been so many things to worry about. I guess if you thought rationally, you made the wrong call. So maybe we should just take our rational thought, throw it all in the garbage, and just trade what you see. And if we're trading what we see, the S&Ps aren't in any trouble at all until we at least get through 320 on SPY. You got a little double bottom in there. So I'm just trading pure technicals right now. Forget about the action last night. It's off the board. It's not there. Let's just think of it not existing. 320 SPY, so bulls are still in control. So I guess I don't get nervous until 320 SPY is taken out. How's that sound?
And good for me. And I'm just, even though we traded much lower in the in the overnight session, I'm still looking at that low from Friday, which was matched by Monday's low, which is still 30 handles away. And technically speaking, on the upside, you had that blow off high at 32.6350. So, I mean, there is some resistance points going up to there. It seems like you're finding some sellers between 32.50 in that area, but let's see if we can get back above that 32.6350. We talked a little bit of Boeing here. Another plane goes down. You would think that it would be down more than $4.76, but
there was rumors yesterday that Buffett was buying it too. I'll be honest with you, I think Boeing's a buy. As long as it's above 320. We talked about this before you had the trade set up, and the resiliency of it with what I've seen here, I think Boeing is a buy. That's my opinion. I'm not long it. I'm thinking about getting long it. Maybe I'll buy it today on this pullback here, but stopping out below 320. It's just not such a nice level. We've seen multiple headlines, bad headlines coming out, and the stock rally. So one concern why, I'm a little hesitant myself to just dive in is I'm still not 100% that the dividend is safe. So, and if they cut the dividend, that could be really bad news. But in this market, who the hell knows? They cut the dividend, maybe
it may be good, right?
Well, it's the most ridiculous market I've ever seen. So, most resilient, I guess, too. So,
well, don't look now, but we're coming into earnings season. If I could pivot away from this conversation, just
sure,
for the sake of variety here, but we're wrapping up. I guess these are still earnings from the last cycle. We have Lennar and Constellation Brands reporting this morning. The market likes them both because they both beat. Lennar beat on its EPS and sales. Constellation Brands also beat on its EPS and sales. Let's start with Lennar.
Lennar was trading down $2 last night just on the nervousness. I saw it trade I believe it traded in the 55 handle last night. I might be wrong. It was at least in the 56 handle, but I think it traded in the 55s.
Dennis, you got a good eye there. It went to 50.
Just under 56.
What was that? Yeah, 56 is the low.
56. Okay, it traded down $1 last night, and I was even saying, I was like, man, there's so many nervous Nellies out here because they're even selling a stock, a home builder, which the home builders always seem to be, and they're hitting that down $1 ahead of the report. I mean, they were hitting everything last night, across the board hitting. They were hitting Coca-Cola. They were hitting Target was down $3 last night. Target was down, I believe it traded in the 120 handle last night. That's how crazy this market got last night. 121, I think 121 even. Target was down almost $3. This Target, why were you selling? And some of this didn't make sense. So I bought McDonald's last night. I bought a few things last night because I'm like, a lot of this just doesn't make any sense. But they were selling across the board. And last night, Lennar, same thing. They were selling that. They were selling everything they could sell last night. They were even selling XLU. I bought the XLU last night. I was like, utility stocks. I bought that like down 50 cents last night. They were selling that down 1% just because they're that nervous. I already sold the XLU. I already sold it this morning, so I already made the 50 cents back. But I mean, that's how irrational the selling was last night. It was not rational. It was sell everything at all costs, except gold, oil, and defense stocks, which they bought up. Like Lockheed Martin, I know I've brought it back to this, but it was just such incredible action. I feel like we don't get to talk about this stuff that much.
Sure, go ahead.
Earnings all the time. Lockheed Martin was up 20 points last night. It traded $4.35. It was up $20. $20. It's flat almost right now. It's $4.16. It's up $1. That's not bad ticks. It was bid up there. 430. Do you see the 435, Joel? It was bid.
I see 438.99.
438.99. I saw a 435 bid. I was like, it's up 20 points. You could have hit that short. A 435 bid all day. Probably got done on size if you wanted to. That's how irrational this market was last night. They were literally pricing in World War III, and they were wrong. The people who were putting on all those positions were dead wrong. The entire trade reversed from gold being up $40, from oil being up $4, to the defense stocks all being bought, to every other stock getting sold. The entire thing reversed overnight.
And I think to put this in context, I think that's why Dennis is so wound up.
I'm flabbergasted.
We get volatility after hours. It's not unusual, but it's very unusual to see trades just reverse across the board in pretty much everything in one night. The
entire night last night didn't happen. That's what this market is priced in right now. Everything didn't happen, but it did. I mean, what an opportunity last night. If you were, looking in, obviously coming in on some of these stocks. I mean, last night, Roku, for instance, Roku was down 5. Tesla, you want to know Tesla? Tesla was down almost $17 last night. Tesla, it's up $6. It's always up $6. It goes up $6 every day. Somebody sold that down 17 points last night. 17. It was like 452. That's not a joke. It was not like on just a quick sweep. It was down there for a while, like for an hour, trading actively down there. What's the low on Tesla?
Let me pull it up here.
I saw 452.
How do you see all these?
452.51.
For real.
I have 452.5.
It traded down there. Like you see, it traded down there. You couldn't have got it. You could have bought as much stock as you could have swallowed on Tesla last night. You could have bought probably $5 million in the 452 to 454 handle if you wanted to. I mean, if you're a big money manager, you're managing a long-term portfolio, could you buy $1 billion worth of Tesla? No. If you're an individual investor, you could have probably bought as much as you can swallow. I tell you, I can't swallow $5 million worth of Tesla. You could have bought that much last night. You could have bought everything last night. It was absolutely incredible. Incredible that it's reversed. I don't think I've ever seen it. I don't think I've ever seen that much fear turn back to the bullishness that quickly. I don't think I've ever seen it in my 20 years. I've seen, obviously, during the financial crisis, you saw whipsaw action. We were down 500, then we were up. So we've seen it then, but those were different times. In stable markets, where all of a sudden we just get a 500-point sell-off and then we get it all back the next day, I don't think I've ever seen it. And what I mean by stable markets is when the VIX isn't at 90, the VIX, which it was in the financial crisis, the VIX was at 13. It's crazy that these stocks were sold that hard last night. There was so much fear. And that's what spooks me a little bit, because that fear could come back. And I saw how quickly and ugly it got. There was people who were in full panic last night. I started thinking, maybe I'm worrying about my long-term portfolios. Maybe this World War III thing, maybe we're going to be down 1,000 or more. I mean, the way it was trading was just absolutely incredible. Who's the guest? Because I don't want to keep going. At 8:35, we got a guest.
Yep, Michelle Krebs. We're going to talk autos with her. And on a normal day, we would have probably talked about Boeing and the auto stocks for the first half hour or so. But we didn't even get to them. But that's okay, because I want to bring her on right now. Michelle Krebs is executive analyst at Cox Automotive, and there's a lot of stuff happening in the space right now. Michelle, good morning.
Good morning.
I want
There
to.
is a lot happening.
There's a lot happening here. We've barely scratched the surface on today's show. I want to start off just because we've talked about it already. Tesla here. I mean, we've talked about the stock. You know the company a little more fundamentally than we do. What are your thoughts on Tesla here and the move it's made and their production in China and everything happening to them right now?
Well, the move in China is not a surprise. That is the biggest market in the world and the biggest EV market in the world, and they're quite popular there. So that is not a surprise. This is going to be an interesting year for Tesla. They're rolling out new products. The sport utility based on the Model 3 comes out, the Model Y. They're talking about this year being when they bring out the electric truck. So they've got a lot on their plate in terms of product launches, and as we know, they haven't always gone smoothly.
So is the only question now, can they deliver? It seems like the question of can they deliver in the U.S. seems like that was answered. If you think that that's wrong, then correct me. But now is the question now, can they deliver in China?
Well, I think that I don't think that the U.S. is a foregone conclusion. I mean, they're rolling out new products. Can they produce those smoothly? The other thing, I think, cash. Are they going to continue to be able to bring in cash to keep the company rolling, because it's not profitable? So there's still a lot of questions in terms of Tesla this year.
I have a question. I don't know if you follow the company at all, but NIO thought to be the Tesla of China. Do you have any insight as to how Tesla's move into China would impact them at all?
I don't know the China market all that well. I know of NIO. China's struggling overall, so the basic fundamental automotive market is a challenge there right now, but certainly it's a market of the future. And
that's a great segue into GM, who warned that their sales in China are going to drop 15% on a year-over-year basis. Give us your thoughts here on what GM is facing.
Well, again, GM faces a lot of challenges. The sales have been dropping in China along with the rest of the market. I don't know, they've talked about bringing a lot of electric vehicles into that market, and clearly there's no money to be made in the electric vehicle market just yet. So that is going to be a challenge. And they have challenges on the home front. They're, trying to turn around the Cadillac division. They've got a lot of new launches this year with their big sport utility vehicles, which are big profit margin vehicles. They need to do that successfully. They're converting the entire Buick division, at least in the U.S., not in China, to no cars and all SUVs. So they also have a lot on their plate.
Maybe we should zoom out here for a moment and just looking at the overall U.S. auto market in 2020. What are the biggest themes going to be this year?
Well, we think that the market's going to be down a little bit. In 2019, sales were down almost 2%, but we still hit the 17 million mark, barely, for the fifth consecutive year. That's a run we've never seen before. We don't think it will hit 17 million in 2020. We think it'll be down another couple of percentage points. We're in the ballpark of 16.7 million vehicles this year. We think there are some headwinds. One concern we have is credit. While it's cheap and widely available, that's not the case with more subprime buyers. And in fact, we're seeing rising delinquencies in that segment. So that will certainly have an effect. And economic growth is slowing a bit. And also, we have sold a whole lot of vehicles in the last 5 to 10 years. So there's not a whole lot of pent-up demand left.
Which brands are best positioned for this year, and if you want to go further out going forward?
Well, Subaru has been the best positioned brand in the U.S. They have had a remarkable run of the last 10 years. They are continuing. They just surpassed the 700,000 vehicle mark. They've had 90-some consecutive year-over-year sales increases, except for 1 or 2, and that was simply because they didn't have vehicles to sell. And they sell with no incentives, low inventories, and low fleet sales. So they're they're often ignored, but they are shining light in the market, and I don't see that is changing. Lincoln, Ford has done a good job with Lincoln. They were way up this year, and they've shifted to a more all-sport utility vehicle line. They've struggled getting the Aviator launched along with the Explorer because of problems at that Chicago plant, but they're looking good. Hyundai Kia, what a difference a few SUVs make. They have had a great run with their 3-row SUVs. So that they're ones to watch. The one on the negative side to watch, Nissan. Carlos Ghosn right now is having a press conference in Lebanon about the situation of his arrest in Japan. That has been just a pale over the Nissan Infiniti brands, and they're going to continue to struggle.
It would seem like, though, that the company is beyond that. No.
Oh, I don't think so. No,
you don't think so?
Not.
Okay.
No. I mean, here's what happened. At least in the U.S., when Ghosn was in charge, he said you will get 10% market share in the U.S. A lot of bad practices were in place. They were discounting hugely when everybody else was dialing back. They had a situation with dealers. They're called stair-step incentives, where you have to reach certain marks to get certain incentives as a dealer. They put a lot of vehicles into daily rental fleets. Those are not good practices, and it hurts resale values, and it hurts the brand image. And so now they've got to do a lot of damage control to unwind a lot of that, and that's not going to happen in a year.
What about FCA here? Haven't hit on them yet.
Right. Well, FCA, we will be watching closely how the whole merger with PSA unfolds. But if you dig into the numbers at FCA in the U.S., yes, Ram did fabulously. Sales were up something like 18%. The Ram 1500 beat the Chevrolet Silverado for the number 2 truck spot for the first time, I think, ever. And Jeep held its own, but if you look at the other divisions, pretty dismal performances, double-digit declines with Fiat, which they've eliminated some vehicles there, Alfa Romeo, which was supposed to be one of their global pillars, Chrysler, Dodge, and they, in addition to working through the merger, they've got some other things happening. They have a big contract with the talk coming up with the union in Canada, which is where they make their minivans and and their sedans. So a lot on the plate for FCA as well.
And I know we've had some news this week out of CES as far as self-driving cars. I've sort of been trying to keep track of it. Is there any headlines that or announcements from CES that you saw as particularly interesting to the automaker space this week?
Well, the shocker was that Sony introduced an electric car. Now, whether they intend to actually make electric car or if it's a showcase for their technology, but that caught everybody off guard. I mean, we've known that Apple had been working on an electric car. We thought we knew all the players. That I don't think that was one that was on anyone's radar.
I think I must have missed that in the deluge of other things I was watching. It was a fully electric car that.
Yes. No, I'm not out there, so I didn't see all the details of it, but it certainly caught our eye. It was not anything that we expected for sure.
What about, was there anything from like GM or Ford that caught your eye at all?
The automakers are a little bit quiet. The traditional automakers are a little bit quiet there. Mercedes did some. Made an announcement of a vehicle, but I think one of the things we're coming to reality on EVs and AVs. AVs are going to be further off in the future, and so I think that some of the euphoria we saw a few years ago when I was at CES is kind of tapered back.
Yep.
And EVs, they're still only a teensy part of the market, at least here in the U.S. So I think there's reality checks happening.
We're on the line with Michelle Krebs. He's an executive analyst at Cox Automotive, joining us here on Benzinga's PreMarket Prep show. Michelle, we've had you on over the years, and I think you've always, painted a really, fair picture of what's going on in the automotive market, as far as, supply and demand. The U.S. automakers hit their peaks a couple years ago.
Mm.
I get these ideas in my head, and I can't get them out. So I'm hoping maybe you can help me with this one. Farther on down the line here, 5, 10, 15 years from now, do you see there being more more vehicles on the road? Or do you think with the evolution of Uber and Lyft and Tesla and self-driving cars that you're going to be seeing a decrease in overall autos on the road?
Well, it depends on the time frame. I don't think in the next 5 to 10 years we're going to see car sharing and ride sharing replace personal transportation by any stretch, and I think we'll probably still see gasoline engines for the next 10 years. I think these will be little incremental changes. I'm not sure what happens with the total fleet. If you look at New York City, there are more, it's more congested with car sharing, ride sharing. But I don't think personal transportation is going anywhere. What I do think we are going to see is some changes in how people acquire that personal transportation. We're involved with, we own a company called Clutch Technologies, which is doing subscription services. That may take off because the price of vehicles has gotten so high, it's pushed some people out of the market. And people want more flexibility. So I think there's going to be more experimenting with how we actually acquire personal transportation beyond some of the things that we know today.
Because I was just looking at it from the perspective of these auto insurance companies, and I know this is way out of your ballpark, but I'm just thinking that overall there's going to be less cars on the road and less people, having, maybe going from 2 car to 1 car. And I just don't see, I know if the insurance agencies are just going to have to keep, raising rates in order to compensate for, the lower number of vehicles on the road. I'm just kind of looking at this. It's kind of like a longer term theory here, but we'll have to see how that plays out over the years.
Yes.
I'm done with cars. I'm done. I'm done. I'm getting rid of my car. I will be down to 1 car here in a couple years, and whatever transportation is, I don't need the aggravation of, all auto insurance and parking and everything. It just seems like I'd have to say in 5 to 10 years, I think there's going to be a lot less vehicles on the road. So if there's less vehicle production, I don't see how Ford and GM are gonna. They're already declining now. So that's just
but think about this. Somebody's going to have to move you around, and so there will be more vehicles on the road to do car sharing, ride sharing, and those vehicles will be in use. The capacity utilization will be far higher. The miles traveled will be far higher. So I think you could argue they have to be replaced more often. So I don't think anyone knows the answer to that. If there's more or less, and it's certainly, some of us live in places you can't be without a car. So,
like Joel.
yeah. So,
what'd you say, Spencer?
You live in Detroit. You can't survive without a car here.
No, Spencer, you know why? Because you're going to drive me to work every day.
Okay.
Using a vehicle.
Right. Exactly.
Yeah, but I get rid of mine.
Yeah. Okay, fine. Michelle, one more before we let you go here. You briefly mentioned subprime auto loans. When are we going to see this? Will it impact the broader economy? We haven't really seen the other shoe drop there.
Well, we're watching that very closely because the November numbers showed a big increase in delinquencies, defaults, and that tends to go up through February. So I would be watching, January, February, as people can't pay their loans and maybe hangover from the holiday spending. We're watching that very closely.
All right, Michelle Krebs has been on the line with us. She's an executive analyst at Cox Automotive, one of the best experts in the auto space. Michelle, thanks so much for the time, and have a good one.
So that just that adds Gene Munster, Spencer, Dennis and Michelle Krebs against my theory
Yeah,
of
everybody just
everyone's against me.
Yeah.
Now I know I'm right. I know I'm right when everyone's fading me on that one.
Okay.
All right. Thanks, Michelle.
Yeah, we got a good question here. Somebody left us a voicemail, and I'm not going to play it, but I want to ask their question. It's a good one that we don't discuss enough on this show. Maybe we imply it more than we discuss it outright. But the question from this listener is, how does the pre-market trading actually affect the intraday market? Like, do pre-market highs and lows provide intraday support and resistance? That's the gist of this question here.
Joel can answer this one.
How exactly does the pre-market trading affect the real main trading session?
Oh,
I'll let you take it, Joel.
Oh, jeez.
Because you've lectured this a few times.
Yeah, I don't know if this person's been listening to the show at all.
Well, we're pre-market prep, so obviously we're biased here. We like the pre-market.
No, they're just asking. They just want to know, like, does it provide support and resistance, or just that it's not?
The answer to all is yes. For sure. Okay, I'll just jump in here because we like the question, so it's a good question.
It's a good question
because there's a lot of because you have all your chart providers that don't even incorporate this action. Like, when you're looking at longer term charts, you won't see the big sell-off that we had last night. But that can impact stocks too. I mean, that has a say in all of it, because what happens overnight is going to make people, potentially, like I said, if you just come in here right now, let's just say we ignore pre-market action and after hours action. If you come in here right now, you're just like, oh, well, they did a miss. It was a non-event. You missed all the fireworks from last night. You missed all that action. I'm not saying you have to profit from it, but there's, people like me who are longer term invested that got spooked by that. So there is, obviously an impact there. And, the pre-market often dictates, where the stocks will go. They're trading down pre-market. They're usually, with the volume, they're usually going to open down. So, it usually prices in. It's just a continuation of the pricing. On news, it's all priced in the pre-market and after hours. I mean, by the time the stocks open at 9:30, for the most part, a lot of them are already priced in the news where it wants to go. So the pre-market action absolutely impacts where it goes. It's more influential than a lot of the day trading and intraday trading, because a lot of the intraday trading is just chop. We get the pre-market after hours action. That's the price discovery. That's where the stocks are moving. That's where the news is. So those pre-market after hours lows, Joel tracks those all the time. I mean, and we talk about them on the show, where it went to in the pre-market. Often during the day, you'll see it, if it was a big level, comes back down, it might retest, it might bounce at that same level. So absolutely very important to, monitor that action, even if you're an intraday trader.
Yeah. And also, I mean, you see, obviously a pre-market level is more important when it coincides with a daily level. But just give you the example here in Boeing, and you saw the news in Boeing, you saw the 2-day low, you saw this area. The people that are out there during the regular sessions, if you don't think that they're out there overnight in the overnight session, maybe not in the same kind of size, but taking advantage of these moves. Also for continuation moves, like you look at something, and I'll just look at the S&P for today, and 32.46 and a quarter. I mean, if I'm playing it from the long side and it gets anywhere near that level, it'd be a great exit point, right? If it gets back up. How many days do you see in the S&Ps? And this could be one of them today, where the actual highs and lows of the session are made in the overnight session. So it's important when you see, if you're looking for continuation moves, you also look at like something like Lockheed Martin. I mean, the reason it's so far off that high is because people bought the thing between 430 and 438 because they're thinking we're going to war. So those people that bought for an initial long or covered a short, they have nowhere to go. They're selling. So there's a lot of the volume. A lot of it depends on the volume that you see in the aftermarkets and the pre-market trading. But man, oh man, so many times you see, the levels coinciding. Let's use like Beyond Meat for a real live example today. Go ahead and give the news today on Beyond Meat.
Right. The news on Beyond Meat is that they are expanding their partnership with McDonald's. We know they already had a small one from last year. They're expanding the Beyond Meat burger trial to 52 outlets in Canada.
Is it getting close to you yet, Dennis?
I was supposed to be in Windsor a long time ago, so hopefully it's going to be coming here soon. Still haven't had a chance to try it because we were on the original Southwestern Ontario. I mean, we were in the heart of Southwestern Ontario, but then I was informed by the managers I wasn't coming to Windsor. So they have to go to London or, further up the road there. So hopefully it's coming here. I wanted to try it, but with that being said, every time we get, good news here or some other deal, Beyond Meat gets a pop. But we talked about the potential to squeeze them here, though. Did we not talk about that like right at the beginning of the year?
It just quiet. Yep.
It was consolidating. And we're like, I said I hated this stock long term, but I also said that this sets up actually not bad as a trade. And yesterday you got some good news. Today you get some more good news. So we're squeezing them a bit. And nothing goes straight down. I still think if you put Beyond Meat in your long-term portfolio, I think it's a mistake if you have, a time frame of anything more than a year. But I think short term, the squeeze is on right now and they can continue to squeeze. But I'm not going to play a squeeze because I'm still biased long term. I think it goes lower. I think the valuation doesn't make any sense. I take what Mark Yusko, one of the initial investors who was on our show talking about it, he bought this at $2 when he was an original investor, and he was selling hand over fist at these prices, saying he thinks it's going a lot lower. I'm going to take his opinion because I think he knows what he's talking about, at least on a stock like this. I do believe eventually it's going a lot lower too. But there is a squeeze going on here right now. This is you got to time these things. I don't believe the time to say, okay, yeah, this is the party's over, because right now you got a lot of people from consolidation station from the last 2 months that think it's going lower, and now it's breaking higher. Think it's $100.
Yeah, and just a real live example for that person that called in. Your pre-market high in Beyond Meat is 90.10, right? So that's about, just because it's 90 and hasn't been up at 90, it's would make it a little bit of a psychological level. But if you go to your dailies here, and it's been pretty far back, and I had the exact day. Let me find the exact day. The exact day was in December here. Boom, boom. You had a high of 90 right on the nose. So there you have a daily high. You get the news after hours, the stock rips up, comes to a psychological level, which is it already was a daily level, and boom, that's where the stock not only stopped, but it turned around and had a substantial reverse. So for me, I'm looking at that. If I'm long that thing, I think it's going to have a hard time getting back up to 90 today. And if it did, I think 90 is going to be good resistance in that thing for quite some time. The fact that, we backed $3 off that level. So
it's a hard stock to trade. I will say that too. This is a very hard stock to trade. It is wild. It is a headline stock. You can see just the headline yesterday and the headline today, and boom, it's up $10. It is a wild stock. So there's way easier stocks to trade. I do very little trading in a stock like Beyond Meat. People think as a day trader, they think you've got to be in the craziest, most volatile stuff. And I've always said I've made my living by trading boring relationships. I just hit base hits, base hits, base hits. Never, ever thinking about the home run. Base hits, diversified in my trading portfolio. When I have a bad loss, it might lose maybe it's a real bad day. Maybe I lose a day of trading, but I'm not going to blow up my month or my year because why? I'm diversified. Even when I've been short stocks that got taken over. Well, you know what? I wasn't all in. If I've only got 2-3% of my trading portfolio in any given stock and stock gets taken over for, 50% premium, I'm only losing 1% of my overall account. So that's why I've always stayed diversified in my overall trading portfolio. But, I've went on a tangent here. The point being is that as a new trader, you're always naturally attracted to what can I make the most money in? What is moving the most? And I tell you, this is why new traders lose. The way I've made my money, I've been profitable every single year in my 20-year trading career, and I've made all of my living. All of my net worth has come from trading, 100% of it. I started with, obviously, back in the day with a loan from the parents, but for the most part, and I obviously have done some different things, so I shouldn't say that. I've done some investing since then. But the core of my money I've made has been from my day trading activity. So don't let anybody tell you can't make money day trading. You can. You just have to do it in a rational way. You have to do it in, a methodical way. I do the same things all the time, taking advantage of little inefficiencies. I mean, last night, you got McDonald's getting sold off 3%. I'll buy McDonald's down 3% and sell the S&Ps down 1.5% because I don't think McDonald's is going to go down more than the market tomorrow. That's an advantage, and I'm being paid for that this morning because if you look, McDonald's is slightly down here, but it's not really even trading in that, it's not an active market. So and the S&Ps are barely up. So, I'm pulling in 1.5% from a trade like that last night, or 1% from a trade last night, and trying to take it off for scratch. So, I mean, there's opportunities like that. Do these opportunities present themselves all the time? No. But an opportunity like last night as a trader, you have to take advantage of. And people are just throwing out the baby with the bathwater. They're selling Coca-Cola. I bought Coca-Cola down like 70 cents last night. The thing's flat. So, I mean, these are, even if we were going into World War III, is it Coca-Cola the stock that's getting killed? No, probably not. So whoever's just selling that license just wasn't using the rational thought. So, those are advantages that I take, those are trades I take advantage of. I'm not sitting here trying to say, make money by calling Beyond Meat and thinking, I think it's going to $100. I said it could. But you know what? I'm not trading it because it might not too. Like I've got this whole overall bearish thesis on it. I think they're squeezing them right now. If it's set up, I might go for a setup, but I don't even see a setup here. I mean, you're trying to short at 87 here this morning. You're right now shorting something in rocket ship mode. The thing just rallied $10 in 2 days. I don't make money shorting rocket ships. I make money when the rocket ship runs out of gas and then starts to leak, and then maybe I jump in. But the key is, that if you're a trader, you got to find different ways. If you're just jumping in all the Momo names, jumping out and bouncing all over the place, you're making money, good for you. But from my experience, and we've seen hundreds of traders coming up break trading, the ones that are just going after all the crazy running guns all the time usually aren't there a year later. Those traders, they're usually are have trouble continuing to be successful. They get some home runs, sure. But are they going to be there for the long duration? I mean, there's a lot of good baseball players that get 5-10 home runs or even have a good season, and at the end of the day, they're gone, and it's because the consistency wasn't there. So I found that I can be consistent by being more boring and trading these boring relationships and just trying to use some rational thought. Even though I joke, and the rational thought didn't make any sense to me for this move here overnight, but you've got to be able to adjust your trading for that as well.
All right, we didn't even get to some of the other news like Macy's giving holiday sales that are better than expected. Some analyst ratings, we didn't even get to those. Not too many this morning. A couple that caught my eye. Bernstein had a positive note out on Beyond Meat. They maintained that they outperform. We also had a note out from, who was it here? Bank of America downgrading a few cybersecurity names, FireEye, Cisco, and Palo Alto, all to neutral. Bank of America also downgrading restaurant brands QSR to underperform. That was kind of it from the analysts. Pretty quiet morning this morning. Cowen downgrading Kohl's and Boeing both to neutral as well. That'll be it for our show. Unless you guys have any final thoughts, I want to thank our guest, Michelle Krebs. Thanks to all of you in our chat, both on YouTube and premarket.benzinga.com. You can always leave us a voicemail, 734-494-0246. We'll listen to it. Maybe play it on the air, but probably just use it more for fodder for the discussion as we just did there. So you can always catch our podcast, as I mentioned, rewatch our show on YouTube if you'd like. And that's it. Please remember, all the information from our show is meant to be used as informational purposes only and not for investing or trading advice. Everyone have a great rest of your day. We'll be back with you on Thursday.